Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club deal review episode. We got Cory here with us again. Cory Nemoto was on. You can check out his full episode in a recent release. He's back at it today, back with us to go over one of his deals. Again, the format of these very short episodes, Cory's going to go over how he found the deal, how he financed the deal, how he added value to that deal, how he exited that deal, and finally, the lessons he learned. So Cory, take it away. How'd you find the deal?
Okay, so I found this deal. It was a pocket listing. Basically, a realtor came to us. They said that his client wasn't comfortable with going to market, but they wanted to test the market, test it anyways. But if we wanted to put in an offer before they actually go to market, then, by all means, go ahead. We submitted the offer and he accepted it. So he rather have gone through off market with us than actually go on market. It did post on market just because of formalities, like they have to post it on there. So, but we kind of got in before it hit the market. It was more like a pocket listing.
Awesome. That's great. I love it when you can get things before they actually hit there. Because once you got it on the MLS, there's a lot of, there's a lot of bidding wars that go on. So pocket listing, how did you finance the deal?
We financed this deal through hard money and private money. So we didn't have any of our own money in the deal. We stacked hard money and then put in private money to fill the gap of that. I don't necessarily remember the numbers, but if you don't mind, I'll pull up my presentation if you want. I'll just put it on the screen.
Yeah, let's do it.
Oh, share screen. Perfect. This one. All right, here we go. This is let me see. Let me just run through this real quick. Sorry. I know we'll keep this short.
Oof, I'm not sure. Cool. So for people just listening, the image on the screen right now is a pretty destroyed house with a pool that is pure green. There's no
looks like a putting green.
Yeah.
Right. So we found this deal at MLS pocket listing. And then are financing the deal. So we did hard money at 80% LTC, 8.99% interest, 2 points. Our gap funding was about $280,000. So the principal debt was $1.224 million between the first and seconds. We also did a strategy that we call dequity. So we had a dequity lender. We gave him debt and an equity position.
Oh, interesting. I've never heard of that.
Yeah. So basically, we calculate it's based off projections. So I don't know if you want me to run through this, but I can real quickly.
Yep. Take us through.
Okay. Basically, like, for example, Bob invests $100,000 at 12% interest APR. The project is expected to take 8 months and net $100,000. So based on projections, Bob is expected to make $8,000 with his interest rate, right? At 12%, for a $100,000 investment is $1,000 interest payment per month. So based on that earnings at 12%, we based on our projections, to calculate his equity position, we divide $8,000 or what he's expected to make off his interest from his debt position. And we divide that by our projected net profits, which is 100,000. So that gives us 8%, right? So we give him 12% interest APR or 8% equity position of the net profits, whichever is higher at the end of the deal. That's what we call a dequity kind of partnership. So the beauty about dequity is that you get to offer your lenders or your investors, your private money, the security of a debt lender with the potential upside of being an equity partner, right? So they still get a promissory note, a mortgage, they still get collateral, a lien position to secure their investment, but they have the potential upside of an equity partner. So if the deal runs long, right, and we make less, they still make their 12% interest because that will likely be higher.
Yep.
Or if we do very well, and let's say we make $150,000 profit and we do it in 4 months, then their equity position will be higher, right? So that's why they get and it doesn't really cost you that much more to give a dequity position to one of your investors. So it's a nice strategy that gave us an edge in raising capital. So that's basically the financing. I don't know if people can see this, but basically we were paying about $351.40 per day. So even on Saturdays and Sundays. So when the crew's taking a break on Sunday, we're still paying for that, right? So you want me to go into the next question?
Oh, yep. And then the next question is, what value did you add? So you can go into the numbers. How'd you add the value to this deal?
Oh, this is perfect. Okay, so we added value by basically renovating. So we purchased it for $925, and then our renovation cost was $170,000. So it took us 7 months to flip this house, closing to closing, and we sold it for 1.38. So basically, our profit was $119,472. So if we looked at that, our total gross ROI is about 9.7%. And if I just looked at it that way, I wouldn't do that deal, because 9.7%, I pay my lenders more than that. I pay my lenders 12%. So, and I'm doing all the work and I'm taking all the risk, so, but we don't look at it. We don't look at the ROI based off of the total amount put in, because ROI is a metric to measure, are you making the best use of your limited resources, right? So hard money, we fortunately, we have strong relationships at the time with our lender, and they open the books to us, so it's unlimited capital. So if we need hard money, and the deal fits, they'll fund us, right? So I don't count the hard money side in our ROI. What I count is the private money or the gap funding, because that's really what's limited, right? So if we look at the gap funding, our ROI is 42%. So we tied up 280,000 and we made 170,000, right? So that's how I calculate my ROI. And I won't do a deal unless there's a minimum 35% return on our private money. So
I like it. So the all in for you guys from your own cash, it sounds like it was 280. You got back 100. Would you say 170 or was it 119?
119.
119. Yeah. Okay. Which came out to be about exactly a 42.6% ROI on the private money they had there. The exit, it sounds like you guys sold this on the MLS, or did you was this a BRRRR?
Yeah, we sold it on the MLS. Yep.
Perfect. And out of this deal, what was the main lesson that you got out of it?
The main lesson that I got out of it was pools are not as easy as you think to renovate, especially when they look like a putting green when you first buy it.
Absolutely. And I wish people just listening, I wish you could see this picture. Literally, the pool it's like bright green. There is not one piece of clear liquid in that pool right there. So
Yeah.
That's an
This is the
awesome deal.
before.
Thank you for stepping us through that one. Again, you guys, if you want to listen to Cory's full episode, the ads. He just switched to the after image. It is beautiful. You can see the bottom of that pool crystal clear. You guys did a great job on that one. So again, yeah, if you want to listen to Cory's full episode, check it out. It's right behind this one, so it should be either the previous episode or the one before that. Other than that, thank you, Cory, again for hopping on, going through your deals. If you guys want to check out our other episodes, look or stay tuned for the ones that'll come around the corner. Look forward to having you on.
Thanks.
Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride.